Good afternoon, everyone, and I would like to welcome you all for the today's investor meet of Sugs Lloyd Ltd. From the management side, we have Mr. Santosh Shah, who is our chairman and promoter, Mr. Satyakam Basu, CEO, and Mr. Vicky Kumar, CFO, and Mr. Surendra Singh, who is business head. Without doing any further delays, now I would like to hand over the meet to Mr. Santosh Shah. Over to you, sir.
Thank you, Janvi. Good afternoon, everyone. Thanks for spending time for us. I have been joined by our CEO, Mr. Satyakam Basu, there on this.
Hi, everybody. Good afternoon, sir.
Good afternoon. And Mr. Vicky Kumar, who is the CFO, and Mimi, the secretary, Mr. Surendra Singh, who is the also. Thank you, everyone, once again. I'll start with, I'll run through this presentation which we made during our earnings call for Q2 results, and then we would like to answer whatever questions you are having. So, if we say today we operate into four verticals. First, when we started as a research and development company where we brought in certain products which were very helpful for Indian electrical grids, and those products were fault passage indicators, auto reclosers, and sectional liners. So these were the products with which we started way back in 2009 when we got incorporated. In fact, the work was going on since 2004, but 2009 we got ourselves incorporated. And we started with those products. Then with time we expanded in turnkey execution of electrical grids, that is power T&D, then into solar, and then into civil. So we are having four verticals right now where we operate. One is product, that is products which are for electrical grid, and these products are concept-based products which were brought by us, and today it is being used by all the utilities in mass. And second, power T&D, third, solar EPC, and fourth, civil. And the total outstanding order book what we are having today, this figure 409 crore is of H1, but today we are having an order book of around 435 to 40 crores. We have got order book, unexecuted order book with us. Our employee strength is around 450. For FPI, the product which we brought in India, we are having more than 50% of the market share, competing with companies like Siemens and Schneider. And since we were incorporated in 2009, we have got 17 years of experience. Otherwise, the business is running since 2004. That is around 21 years. We have got our presence pan-India, primarily in the state of Bihar, Odisha, now expanding to Punjab, Maharashtra, Gujarat, Himachal Pradesh. And entire 99% issues like NTPC or AAA rated or AA rated companies like Tata Power Utilities and Indian Railways, etc. So you can say whatever business we are executing, the debtor is 100% safe. As I said, we have got our presence in Himachal Pradesh, North, Punjab, Uttar Pradesh, Bihar, Odisha, Chhattisgarh, Maharashtra, and Gujarat. So if you see today the 435 crores order book which we have got a clear visibility of revenue for next 24 months. Though these orders have got a mix, some needs to be completed in 6 months, some needs to be completed in 2 hours. But we say, considering all those things, 24 months we have got the order book in hand. But again, this order book is not something which is going to sustain us. So this bidding and all is a continuous process in the company, and we have got, as on date, around 800 crores tenders which has been bid and which are at various stages of evaluation. And we may expect around 20% strike rate, so around 160 crores order in maybe next or within this financial year. As I said, today we are into EPC, but we have opportunities are huge. So we are working on how we can bid for bigger projects. So we have entered into certain agreements in some central government PSUs who will help us, and with them we are making some arrangements to bid for projects up to 1,000 crores also. And some tenders are at final stages of where we are going to submit the bids. We may not be able to disclose it right now, but yes, all those processes are in place. Next. As I said, the client portfolio which we have got, NTPC, Tata Power. At Tata Power, we are not working only with Tata Power. Tata Power has made a joint venture company with the government of Odisha, which is a JV of 51 and 49 Tata, 51 Tata, 49 government of Odisha. So they have taken that discount, so we are working for them. So we can say entirely 90% of our business is coming from government funds. Now, again, one thing. If you see the projects which we are executing, whatever project we are executing, though we are executing it for state governments, but we are ensuring that even if it is a project, our customer is state government, the project is funded by some entity where the fund is secured. Like majority of the projects which we are executing is funded by central government under RDSS scheme, under various central financial assistance scheme and all those things. Now, this is the leadership team we have got. Mr. Basu is working with us, who has got around 43 years of experience. Vicky is there, who has got a good experience in this EPC space. Then all these senior people, they carry rich, experience of products and businesses in respective fields. And they are coming from top-notch companies like Bajaj Electricals, Birlas, even Godrej and L&T also. Okay. Yeah. One more thing I missed in that team, the total team strength what we are having is around 450. Out of 450, 40% of our team is graduate engineers. And on an average, the experience we are having is around 10 years. Every individual is having 10 years of experience in their particular respective field. Now, our competitive edge, as I said, we give time the first priority when we are doing the business, because in EPC it is all about time. If we are able to complete the project in time, we can maintain our margins also, and we can ensure continuity of business also. So on time we deliver, that is the culture. Till date, the LD which has been imposed on Sugs Lloyd has been 0.016% only. So that shows what kind of performance with regard to time we give. Digital first, yes, we are continuously developing tools, software tools, platforms to improve our efficiency. That is something which has contributed in improving the margins for company. We have got a very strong vendor ecosystem, be it suppliers, raw material suppliers, or be it pool of contractors who are ready to deploy at site as and when required. And that is our strength. We don't lose even a day from the zero date. Whenever a contract is awarded, our reverse counting starts, and we are able to mobilize team with a very short span of time. So that gives an advantage to complete the project in time. Then allied talent pool, as I said, we have got around 40% graduate engineers. And then the sectors which we are working, they are all interlinked. Like solar project, if we are executing in solar, we are having the evacuation lines and all. Where we are already present, we are already doing work for various states. So we are having that expertise in that. So all the business are interrelated. Even the civil, what we have started, that also we have started with a discom only, and later on we are going to we have got plans to expand it. So these are some snapshots of the software tools which has been developed internally, which helps us in improving our margins and managing the projects efficiently. If I say the performance, H1 performance, you can see that revenue has grown by 94% year on year. EBITDA has grown by 91%. PAT is again 94%. And EPS is 5.09 as on date. These are the indicators. I am sure this presentation must be with you. If anyone is having any question, we are happy to answer.
Yes, I would like to request investors, if they have any questions, they can unmute themselves and go ahead, please.
So we can take those questions at the end of presentation.
But I don't know. Where can I find? Internet is already working. The mobile.
So your voice is not that clear. We are not able to hear you.
नंबर नहीं है. PF contribution है. नंबर कैसा है?
भी होता है वहाँ पे कॉन्टैक्ट.
अच्छा तो हमारे प्ले स्लिप में नहीं आएगा. Let me check once.
Yeah.
So we'll take questions at the end. We'll finish the presentation first.
Yeah, fine. So this is again the same numbers which I said. It is details of those numbers. Balance sheet summary again, it is available with everyone. Okay. These are some of the snapshots of our projects. If you see this products, these are the fault passage indicators. I would like to show you. These are the fault passage indicators. These gets mounted over the conductor, and then these get powered in two ways. One either directly from the line or through solar, and then it communicates to a data concentrator unit through radio frequency, and then DCU communicates with the SCADA control center through GSM or GPRS as per requirement. Next. So as I said, we are into three segments. One is power T&D, where the opportunities are huge. RDSS scheme is coming, grid modernization, turnkey substation execution, all these things we are doing. In solar EPC, we are working majorly for governments. Now we are heading to CNI segment also. And for governments, we are installing rooftop plants on all the government buildings in some states. And not only installation of those things, but maintaining it also for next 5 years. So that is also in our scope. So these are the two verticals. Third vertical is niche products and solutions, where we are supplying these outage management system products like fault passage indicators, auto reclosures, sectionalizers, and all. So if I say business outlook for power T&D, then it says strong tailwind for this. RDSS scheme is there, which has got an outlay of around 1.5 lakh crore. So that brings a huge opportunity for us. Then there are one nation, one grid scheme. Then there are various schemes. If I'll say all that entire, our sales funnel. So if we say next previously, if we say today we have got Today, the tenders which are there, which are at final stage at various, stages of evaluation is around 480 crores. And the tenders which we have identified where we are planning to submit our bid is for 1300 crores. Next. Same is for solar EPC. The tenders which we have already submitted and which are at various stages is around 158 crores. And the tenders which we have identified for bidding is 311 crores. So this 311 crores has further increased. It has not been, because we are now planning to bid for around 1000 crores of tenders in solar EPC. Another thing what we have added, we have started bidding for battery energy storage system projects, and there are few tenders which we have already participated and are at various stages of evaluation. So these are the niche products which we are talking about: auto reclosers, sectionalizers, and fault passage indicators. If we say the driver for these kind of projects, this kind of product is that government of India has taken a stand, or they have given a mandate to all the discoms to reduce their AT&C losses to 12% from around 22% which is today. Now these AT&C losses, to reduce these AT&C losses, our products are very helpful. So every discom is trying to incorporate these products in their bid, and which can contribute in achieving their targets. So we see a huge business going to come for these products. That is why today companies like Siemens and Schneider are very aggressive for these products. Today the tenders which are at very advanced stage is for 12 crores, and the tenders which we have already selected for bidding is for 110 crores. Now, since we are R&D house, we have been developing new products and all. So the new products where we are working, where the team is currently working, is we are working on developing this compact fault passage indicator, which is at a very advanced stage, and very soon we will be putting few units on a proof of concept basis to any of our customers. So this is a product where we are working on, the team is working. Second is medium voltage switchgear. Now whatever this auto reclosure, sectionalizers, or fault passage indicators which we are supplying, these are again expensive products, so we are not getting that kind of a volume today. But later on volume will come. But today we want to have a volume, so and that switchgear today it possesses a market of around 4,500 crores. And very soon, maybe in 2 or 3 months, we will be able to put our first medium voltage switchgear on a pilot basis to any of our projects. And we are also contemplating to bring new technology ring main unit, which will be first in India. That is, the insulation medium in those ring main unit is dry compressed insulation type. So that will be the first. Though Siemens and Schneider's and ABB, they are having those products, but they haven't started commercially supplying these products in India. But sooner or later, this product has to come, because the existing technology, which is SF6 insulated, is going to be banned very soon. In Europe, in China, in South Korea, in America, it has been banned. Very soon we expect it to be banned in India also. So these products will be having a huge effect. So as I said, the tailwinds, the macro governing factors are in our favor. Policy acceleration is there, then private sector momentum, and ESG. Why Sugs Lloyd? Because we are in the right sectors, all the sectors where we are operating, the high growth sector. We have got good capacity to execute projects and to deliver the things on time. And we are at the right time, because this is the time where we have got those opportunities coming. Maybe 5 years down the line, we may not have the opportunity. This is the right time for a company like us to grow. So as I said, we are future ready, and our commitment is simple. We deliver on time, every time, with precision, performance, and purpose. Next. I think that this is end of the slide. Thank you. I would like to open the floor for questions, please.
I think Deepak sir, you can go ahead, please.
Hello, good evening team. Thank you so much for taking my question. Hopefully I'm audible. Hello.
Yes, sir. Yes.
Yeah, hi sir. So sir, I just wanted to know in terms of our seasonality. So in H1, H2, I'm assuming H2 will be better. So could you quantify like how much would H2 usually be of your revenue?
Yeah, there has been historical record where H2 contributes around 60% of the total revenue.
Oh, okay. That's helpful, sir. And sir, with regards to your margins, so I think we are having industry, higher margins than our complete industry. So you feel that this will sustain because as you bid for more projects at a higher scale, there might be more competition. So how do you see margins, in the future?
See, when you say margins, there are majorly two industries we are operating into. First is power T&D and second is solar EPC. If you see power T&D, our margins is almost same. If you take any EPC company who is into power transmission and distribution, their margin will be around 8 and 9% and all. So our margin is also 9%, between 9 to 10 it remains. Second is solar EPC. Now the EPC where we are operating in solar domain, it is a different. It is EPC which is scattered in nature. Like we are executing projects for state governments where we have to install rooftop solar plant on all the government buildings in state. Like in Bihar, we have to install a rooftop plant on we have installed till that around 2,000 government buildings we have installed. And these government buildings are scattered. To manage such projects, it needs a different kind of a skill set, different kind of tools to monitor it, and we need some software tools. So that we have developed. Now, in this segment, there is one more thing. The bigger players like Larsen & Toubro or the bigger players, they are not willing to enter into it. And the competition what we are getting from smaller players, they are not able to exit. So companies like us get a very good opportunity to maximize to execute it efficiently and improve the margins. So electrical, we are almost similar to a little better because of our efficiencies than the industry. But in solar EPCs, definitely we are better because we are executing projects which are of different nature, which are of scattered nature. And going forward, this will remain because in electrical, our size is becoming bigger. The competition what we will be getting will be less, so margins will improve. And in solar EPC again, we are very choosy where to go because opportunities are huge. So we are very choosy which all projects to which all tenders to participate in. So on that because of that selective nature, we will be able to maintain similar kind of margins. Plus the products which we are which is there with us, these products has got a good margin, has got a very good margin as compared to distributors. Now the contribution from products business will increase day by day. So that will also contribute in managing or sustaining these margin levels.
Okay. So basically our margins.
Santosh sir, 1 minute. I'm being called for the meeting with the MD of Chhattisgarh Power Supply Corporation. So please excuse me.
Yeah, it's okay, sir. Please.
Okay, sir. Thank you.
Yeah. So just like to summarize, we don't see that margins, our margins will sustain for the next few, years, if I may make that assumption, sir.
Yes, you are right.
Oh, okay, fair enough, sir. And I just wanted to know, like, when you said, we are being selective in our solar, contracts and everything, how do you see the industry right now? Because, there are some concerns, maybe there is, oversupply happening in solar, government is working on, trying to, able transmit everywhere. So how do you see the industry right now? Like from your perspective, is there a way where there is a small bubble kind of happening in the solar world, or how do you think that will impact companies like us, sir?
See, very new NRA guideline which came, or it was not guideline, it was just as in the industry. But I see that is mostly for panel, and those panel manufacturers, it is bringing some kind of a opportunity for EPC players. Like once those things are suddenly those panel prices have come down, it is a matter of concern for panel manufacturers. But by God's grace, companies like us who are in EPC space, we have been benefited out of this entire system. In fact, today our raw material cost and all these things, input cost has come down. Our margins has further improved. So, from company point of view, I do not see. I take it as an opportunity. But as a solar space, yes, a lot of things needs to be corrected because some kind of a bubble and all was formed from development side as a developer. But as a EPC player, we are immune to.
Okay, fair enough, sir. And sir, just when you said, we've had an 800 crore order pipeline. So when do we start seeing the results of these tenders? Like by the time, Q3, Q4, when do you see the results of these tenders coming in, sir?
See, the 800 crores pipeline with what we have shown, we should expect the results to be financial year.
Okay, fair enough, sir. And so based on our current order pipeline, sir, how do you see FY27 panning out for us, sir? Like in terms of our growth, because we've grown at a significant pace right now. So, how do you see, sir, FY27, sir?
FY27, see, there will be a spillover of the current order book also in that financial. Plus, there will be fresh order book also. Fresh order book which we are doing in this financial year. Plus, this is a tendering and bidding is a continuous. So we expect some order in Q1 and Q2 also. So the kind of momentum which we have maintained in past, we are very much confident that same kind of momentum will be maintained for 27, 28, for next few years. There will be no dearth of order book to maintain such top lines.
Sir, our momentum has been nearly doubling revenue. So can we do something on those lines, at least like 70%, 60% plus growth?
Yes, it will be. See, very frankly speaking, I will not be able to commit you the number, Deepak ji. But I can show you the kind of commitments we have been given, even the projections what we have given in DRHP and all, we are going to overachieve those projections. That is what I can say.
Okay, fair enough. Yeah, that's it from my side, sir. Thank you so much, sir. All the best.
Thank you. Next, please. Yes, Mr. Achyut, if you can unmute yourself and ask the question, I think.
Yeah. Hello, sir. Am I audible?
Yeah, you are audible now. Please.
Sir, I want to understand your niche product. Like, what is the market size and how much revenue we can get from niche products in the next few years?
See, you want me to explain what exactly the product is, or just the market and the business opportunity?
You can explain about the product as well, yeah.
Your voice was breaking. Can you come again, please, sir?
Yeah, you can expect about the product as well.
See, earlier, which city you stay, sir? Where you put up?
I stay in Hyderabad.
Hyderabad. So, if you see 10 years back, you must be witnessing power cuts, and that power cuts must be extending for 1 hour, 2 hours, or 3 hours like that. But today, you don't see power cut, or rarely you see power cut. That doesn't mean that power breakdown is not happening. Their power breakdown is happening today, which reduces the total outage time, or which smartly insulates the area where power cut has happened. So our fault passage indicator, what it does, it reduces the total outage time. If there is a fault in any electrical grid or line, the biggest problem in restoring the power is to identify where exactly the fault has occurred. Now, fault passage indicator device, it helps utility to find exact location of fault. They go, they repair the fault, and the time which was required to identify the fault, it gets reduced. So this is the use of these products. They reduce the total outage time. It improves the customer experience, and at the same time, it improves the revenue and all of the discom also. So that is the use and application of this product in a very common language. Now, if I say the market size for this product has got a penetration in Indian electrical grid or infrastructure only for around 10%, only 10%. And earlier, these products are a bit expensive, and majority of the electrical companies, these are government-run companies, and it becomes very difficult for them to take cost. But once Tata has come into electrical distribution business, they have taken the discoms like Delhi and Odisha. They understand benefit of these products, and they have started using it in mass in their system. So seeing them, other utilities, other state discoms have also started. Like Himachal is using it, Gujarat is using it, Bihar has started using it. There are various kinds. Somebody uses communicable, somebody uses non-communicable. So overall the penetration is increasing, but even after so much, it has reached just 10%. So 90% of penetration is yet to happen. So market size is huge. You can just open that market size for the niche products. Market size is huge, and the number of players are not many, only few. There are few MNCs, and then there is Sugs. And we are having more than 50% of the market share. And our product we are able to customize the product as per different state requirements. Now, this niche product, fault passage indicator, will be different for Odisha state, and it will be different for Himachal state. So, there is an opportunity for the entire market to grow, but as a company, we will be having even better opportunity. Today we'll say, then the total opportunities as on date is around 300 crores, which are at various stages. Some are at very planning stages, some are at, under discussion. For some, tenders are out, and for some we have already submitted early. And this is going to grow. We can easily say a CAGR of, it should grow not less than 80% or 90% CAGR yearly.
And sir, my next question is regarding how much percentage of revenue we are making from power T&D and solar, and along with nature, what is the current ratios and what is the future targets for that?
The contribution from solar and this power T&D, it remains around 40 to 45% each. And 10% contribution generally comes from our niche products. And this contribution 10% is going to increase. We see this contribution percentage increasing every year.
Like going forward also, I mean,
Going
maybe
forward, electrical and that is power T&D and solar will remain almost same, and this niche products will increase.
okay. Thank you, sir.
Welcome.
Priyanshi, you can go ahead, please.
Hello, am I audible?
You are audible, but you need to speak a bit loud.
Yes. Thank you, sir, for taking my question. Sir, I just want to understand, like, what exactly we are planning to do in the BS side.
In BESS?
Yes, a battery energy storage.
Yes, yes. We have started bidding. We are going to execute projects for various government utilities. We have bid for right now the name may not be available with me, but we have started bidding, and then there are few big tenders, huge tenders which are coming from NTPC. So we are working on that also. So whatever opportunity comes where we are eligible, we are exploring it how to bid.
Sir, as you said that we are started bidding, so could you please share the number, like currently how much we are bidding for?
इसका 35 करोड़ का एक ऑर्डर को सेलेक्ट करने का है।
35. One tender which we have bid, it's the order amount, the contract amount will be around 35 crores.
And sir,
And the order in pipeline, the tenders in pipeline is around 300-400 crores we have identified, which is which are best projects.
and sir, how much we can expect that it will convert?
See, as I said, our strike rate remains around 20%. So you can say, now these best projects, it takes time to finalize. So whatever time it takes, we should be able to bag around 20% of the tender what we are bidding.
Understood, sir. Thank you so much.
Thank you.
Disha, you can go ahead, please.
Hello.
Yes, you are audible.
Okay, yeah. So, sir, we mentioned that we have around 435 to 440 crores. This is the current order book. We are expecting some order inflows. So, given the execution pace, so what's the sort of closing order book targets we have for this year?
See, this year the total order book which we plan to carry over in the next year should be around again 420 crores like that. Addition of new. So we will be adding new orders also. We will be converting these unexecuted into billing also. So the total order which we will be carrying over for next financial year will be around 400 crores.
Okay, and what's the sort of order inflow we are building in for the second half of this year?
See, the total tenders which we have bid is around 800 crores. And our strike rate is 20%. So going by, you can say around 160 crores of order we should expect in this financial year.
Okay, all right. And so you mentioned that the revenue mix between T&D and solar is going to remain as it is, and the niche product is going to increase. So what's the sort of margin profile that we have for this niche product segment?
Niche product, the margin is quite better than the solar EPC.
Can you
be able to exact comment on what is the figures, but yes, it is pretty better than the EPC business.
Okay, so any ballpark range also, sir, if you can give?
I'm not sure whether we are supposed to, because of this regulations and all, we are supposed to talk on these things or not.
No, sir, just trying to understand. So you mentioned these 15% EBITDA margin is sort of something that we can maintain. I was just trying to see what's the upside, because as the niche.
I can give you, Disha, a general listing. We are competing with Siemens and Schneiders and ABBs. These are MNCs. And, competing with them, we are having 50% of the market share. So obviously the things are better. And there are not many manufacturers, there are not many companies who are into these products. So competition is less, hence our margins are also better.
Okay. So any target, like, so I understand it's at a very nascent stage. Any target you have, what share will you ideally want from all the three sectors? Power, T&D, solar, and the niche segment.
See, we ideal our this thing should be that all the three should contribute equally, or the one which is a major contribution should contribute the most. But that is not exactly possible at this stage. But yes, we want that niche products contribution should increase every year.
Okay, understood.
We are working very aggressively on it. We are in discussion with PFC and RECs also. We are trying to convince them on the benefit of these products, so that it can be deployed on mass level in the country.
Okay. And so for this, for the beginning of FY27, what's the sort of order inflow we're expecting? Because I think if we're saying 80-90% CAGR, that's a huge growth and that's a huge number. So what's the sort of order inflow that you're targeting for FY27?
80-90% CAGR, which I said, was only for niche products.
Yeah. The momentum that we're saying that will maintain. For that.
See, the order book, as I said, it's very difficult to give exact figure of how much we will be able to win. But yes, tendering process is on, and today we are sitting on a tender where we have submitted our bid of around 800 crores. Maybe in next in Q1 of financial 27, we see huge business coming. Many tenders will be out. So we'll see which all participate and will be participating. So all those tenders are in pipeline. Like every state, they have been given mandate by Government of India to reduce their AT&C losses. And RDSS scheme, a lot of money is being pumped into this electrical grids and all. So they are planning. They are working on many tenders, many projects. So once those tenders are floated, we will bid for those also.
Okay. So understood, sir. So I think order book wise, we have the full visibility. So you see any risks in execution? Anything that you feel that we might not be able to meet our targets?
No, not at all. Why? Whatever projections or whatever figure we have given, whatever we are giving is being on conservative side. So we are going to overachieve it. That's for sure.
Okay. That's it from my side. Thank you so much, sir, and all the best.
Welcome. Thank you.
Mr. Jignesh, you can go ahead, please.
Yeah. Am I audible?
Yes, Jignesh.
Yes.
So, sir, as you mentioned that 40% of the employees are graduate engineers with more than 10 years of experience. So, from all the divisions, are all these engineers more in the niche product side?
No, these engineers are on EPC side. Niche products, the total employee strength which we are having for niche products is around 30 to 40 odd people. Rest are all for EPCs. And niche products, not 40%. A niche products, it's 100%. They are, qualified engineers and from top colleges.
Okay. So EPC, you might be referring to T&D side, because in solar EPC, I don't think we require such a big chunk of people in terms of graduate engineers.
It is mix of power, T&D and solar EPC. In solar also, the senior positions are graduate engineers, and majority of them are having experience of 15 years and above.
Okay. And the other thing is, in the recent months, if we see the bidding in BESS, a lot of players have aggressively bidded. So going forward, there are concerns regarding whether they will be able to achieve the margins. So what kind of tendering you are looking at so that your margins are not impacted?
See, we are, again, very rightly said, we are not going to be so bullish on anything unless and until we are confident that we will be able to manage the bottom line. The best projects which you are saying right now, these are, as a developer on a RESCO mode where they have to quote where they have to bid stating what will be their per unit generation prices. Whereas we are concentrating mainly on EPC. Now many PSUs like NTPC etc. they are coming out with tenders for BESS on EPC basis, where we have to install, we have to take our money back, and for every year maintenance will be paid some fees. So we are into that kind of business, and again we have bid for some projects. We are exploring how the things are going to be, because procurement policy is L1. We cannot we can't do anything on that. But if BESS is not giving us margin, we have got other players, other areas where we have got expertise, which is stabilized business like power T&D. It is stable. It is the margins remains almost same, and it has got a high entry barrier also. So those areas are also there, which will contribute to our business.
Okay. Final question in terms of T&D segment. Recently, we had seen that in Rajasthan, transmission big projects were delayed by around 18 months. So, if we carry out EPC in T&D, so any kind of risk that we see because of delay in terms of not getting the approvals on time?
See, this is a very common, thing in any EPC business, especially in power transmission and distribution. Now, here I would like to further clarify. What has happened in Rajasthan transmission? It was a transmission tender where a lot of corridor and ROW permissions has got a huge impact. We are majorly, though we are planning to enter into transmission also. But as on date, our major operation is into distribution segment, which is, up 33 kV and below. And second, why we may not be able to, get into such trap? Whenever we are bidding, we have given two critical guidelines to our bidding team. First, we should bid for only those projects where the funding is from either multilateral agencies or from Government of India, or it is under some deposit scheme, like somebody who has deposited the money with DISCOM and they are floating the tender. So we ensure that those entities should be there in those projects. Now, once Government of India is involved or has funded any project, they keep on monitoring on the execution of project also. If Government of India is monitoring, there are very remote chances that state government will be lethargic, or they may do some kind of a dilly-dally and all. What I want to say, we ensure that some monitoring body should be there on these customer also. That doesn't let these kind of delay happen. This was one of the things. Second is, we also say that whatever projects we should execute, that should be directly benefiting the local public. There also any kind of lethargical or any delay in approvals from DISCOM and all can be taken well by the political representatives and all. So whatever projects we are executing, customer has been very proactive, I'll say, very cooperative in getting it executed in time. So we ensure that whatever tender we should bid, it should not get stuck because of some ROW problem. This is a common thing, and we take such and certain precautionary measures how to avoid it.
Right. Thank you.
Thank you.
Mr. Achyut, you can go ahead, please.
Yeah, sir, one more question I have. I think you are planning to post quarterly results. So, is it in line? Are you going to post quarterly results from coming December or?
So will you please repeat the question?
Am I audible now?
Yes.
Sir, my question is regarding the quarterly results. I think in the previous Concall, you mentioned that you're planning to go for quarterly results. Can we expect quarterly results from this December?
Yes, we have said, and we are firm on that. The Q3 results will be out after December.
Okay. Thank you.
I would like to request investors if they have any questions, they can unmute themselves and go ahead, please.
Yes, sir. Jignesh here.
Yes,
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 sir.
you can go ahead.
Sir,
Yes, please.
wanted to check the kind of biddings that we are doing. So, since we are associated with NTPC and all the big players, so any chance that we will bid for bigger projects like with more than 500 crores of orders that we can get in a single shot?
Yes, as I said during my presentation, we have made arrangements with certain central government PSUs with whom we are eligible to bid for projects up to 1,000 crores. We have made certain arrangements, and yes, we are eyeing those things. We are exploring such opportunities, and we will be bidding. We are in the process of bidding. One bid is going to be submitted in next 15 days, but we will be bidding others also.
Right. Okay. Thanks.
Thank you.
Any other investor who wishes to ask questions, they can unmute themselves and go ahead, please. I think so there are no questions from the investors. We can conclude the meeting here. Thank you so much, Santosh sir, for explaining all the business and answering all the investors' questions. And thank you, investors, for joining the call today.
Thank you, Janvi. Thank you, everyone. Have a good day. Thank you.
Have a good day, sir.